All right, thanks, Marco, and good morning. I'm Chris Johnson. This is my 36th year with the company, and I've spent 12 years living and working in Asia. So it's really great to be back. Also, it's really nice to be back with and reconnect with many of you as well. So Lucas showed a disclaimer at the beginning of the session, so I'll make a little disclaimer myself. I started in January, so I'm 4 months in the job, so I'm still reacquainting myself with this very dynamic, diverse, and growing zone. So as you know, Zone AOA has around 70% of the world's total population in 95 countries. We organize that into 13 markets or regions, which report directly into me. But then you cluster those into, say, 5 geographic regions. ASEAN would be the largest, around 31%. Greater China, 30%. The developed markets, we say Japan, South Korea, Oceania at 14%. South Asia, subcontinent at 13%, and then Sub-Saharan Africa at 12%. Sales represent around 23% of the total group, while profitability at 22.8% is around 31%. We have close to 100,000 employees in 90 factories. And when you look at the types of categories, beverages is the largest. Coffee is around 75% of that 28%. Then we have dairy products, nutrition, food, confectionery, and pet care, with a balance of both local and global brands. There are a number of forces, of course, shaping the environment in Zone AOA, all of them actually providing opportunities for us. Urbanization is a driving factor, as you know, in food and beverage overall. It's a driving factor for our business as consumers seek safety and quality and convenience. And today, AOA is home to 2/3 of the city dwellers in the world, and this will continue to grow. We have the dynamic of growing youth and aging populations, aging populations both in Asia and in Africa, and youth, of course, fastest growing in the Africa area. Personal incomes rising. You know, GDP, of course, across the zone is around mid-single digit, but where we really see opportunities, of course, is when personal income per capita hits certain inflection points in certain markets, and then we want to make sure that we time that correctly so that we're there with our products when people can afford them. The trends in health and premiumization are similar to what we're seeing around the world. Of course, in this part of the world, safety and quality are extremely important. That trust is key. But also we're seeing consumers demanding more and more the types of health trends we're seeing in the developed world for organic and natural and so on. And we're also seeing premiumization growing substantially. Digital, absolutely transforming the way that we do business, the trade does business. And then increasing local competition. In the past, it used to be that perhaps local brands weren't as trusted. Now we're seeing in many cases, in India and China and others, that local brands are actually achieving a certain preference. And for that, of course, we have an advantage in that we are local. We have local brands, we have a long presence in these markets, so we have to be sure to communicate that well. We also have the Virtuous Circle. I think we've been operating this way for a long time. We haven't really talked about it very much in Zone AOA, but it's an easy way to explain internally and externally how we operate. We do look, of course, to achieve efficiencies. Last year, we did improve our structural costs. We did save significantly from projects, primarily in procurement. We invest those into growth platforms, which then drive market share gains. And I'm pleased to say that we did gain market share overall across the zone last year, and in coffee in particular, you can see the 20 basis point gain. We also will deliver profitable growth. We'll continue to do that, and then creating shared value as well, both Nestlé and society, which I'll talk about later, as well as an important focus on safety and quality. So we have 6 strategic priorities I'll go through quickly. You know, strengthening growth in key markets, you know, leading in the coffee world, premiumizing through innovation, expanding in these white space geographies, leveraging our category strength, and developing digital. Let's talk about key markets. And of course, largest single market for us is China. It's the largest in Zone AOA. It's the second largest in the group. Total sales in 2018 were around $7 billion with mid-single digit growth. I think what's impressive about China is the sheer breadth of categories in which we compete in this market. And as all of you know as well, you know, data and how we handle this whole digital world in China is key. And what we've done is go way beyond e-commerce. I mean, we're talking really here about e-business and starting with consumers. Because we have this broad portfolio, we're able to collect and then fully leverage the contact points we have with consumers across these categories in which we compete. We're also able then to take this information and partner well with leading e-commerce platforms across China, and then also not only on the front end but also on the back end hook up with their systems to ensure that we have good logistics. We're also looking to modernize the portfolio. Cold brew coffee, mentioned earlier, is one where we introduced. We are the leaders in ready-to-drink coffee in China, and this product has had great offtake. It took us 12 months, basically, from idea to launch, which in reality is too long. What we're looking to do is really drive speed when it comes to consumer-centric innovation. And Stefan talked earlier about the R&D centers, one of which we have in Beijing. We have 4 across the zone, but here we have it very close to the business. And we've launched an incubator team which working closely with R&D and then leveraging the assets that we have are able then to launch products, often starting in the e-com or the online area, moving in some cases offline with incredible speed. In 2017, we had 34 new products introduced with an average time of let's say 12 to 18 months or so. What we're doing now is in 2019 looking to launch 170 new products in a time frame of 6 to 8 months. So here are a few examples, and many of these actually were ideas that were in the R&D organization and maybe had never been developed, but then very localized for Chinese tastes. We have some herbal soups, one-shot soups, that were produced on our Yinlu platform. We have some healthy nut snacks, which were produced in our Shufuqi production lines, and also a protein water, which is achieving some good results in the sports and fitness area. Another, of course, important market for us, India. India being, for us, around a 1.5 billion Swiss franc market with last year double-digit growth. Number 15 overall for the group, but big opportunities to drive penetration across the urban areas. Great opportunities to accelerate premiumization through innovation, and also to expand our portfolio into some new categories. We're the first ones to go out, for example, with this yogurt-based dip. A new type of breakfast cereal we've launched under the Nest Plus brand, which is designed also with not just standard Western ingredients, but also Indian ingredients with a special crunch. And then also a chai tea mix, which is a little bit analogous maybe to a coffee mix. We're using our everyday creamer and adding chai tea mix to create a very tasty and also very convenient product. Also, second, coffee, big opportunity for us here in Zone AOA. It's about a third of the total, let's say, coffee opportunity globally, and the category we estimate will grow around 10 billion over 5 years. And we feel very confident in the areas where we compete that we'll be able to continue to either extend our leadership position or continue to grow. Portion coffee, RTD, where we have leadership, and soluble as well, where we have leadership. RTD, I should qualify, except for Japan, are all areas where we have some good innovations. And then workplace and hotels, when we talk about out-of-home, also show promising growth. When we talk about coffee then, we basically want to make sure to strengthen our core business. This is primarily soluble coffee and coffee mixes, both with new technologies, as well as new consumer-facing concepts. For example, using micronized coffee mixed with soluble coffee to create what we did in Japan, a new category called regular soluble coffee. We also want to lead in innovation, both in products, and here's an example of the gold jar from Zone AMENA, which we've launched in ASEAN and Oceania, but also in business models. For example, again, in Japan, we've created the Nescafé Ambassador and Home Subscription Program. And these continue to grow, and we've created a network of more than 500,000 Nescafé Gold Barista and Dolce Gusto machines in small offices and households across Japan with more than 500,000 active users. So these are kind of innovative direct-to-consumer business models enabled by e-commerce and direct marketing in small offices. And in fact, these ambassadors are kind of like a voluntary sales force for our products. The cold opportunity, iced coffee in multiple RTD and soluble formats, is very promising. Again, out of home, particularly workplace and hotels. And Starbucks looks very promising. It's still very early days. We've launched so far in Japan, Korea, and Taiwan. The balance of the zone will start rolling out in the second half, but very, very strong equity, of course, for the Starbucks brand across the zone. Premiumization is absolutely driving profitable growth for us. You can see here that we've had a yearly average annual growth from 2015 to 18 of 9%, and that's primarily driven by infant nutrition, but there's clearly opportunities in other categories as well. I mean, a good example of this is, of course, what has happened in China with Illuma. Now, Illuma was first launched in 2011. It's really helped to lead the way in a dramatic shift in which basically China's infant formula market has evolved. Used to be 95%, let's say, in the economy segment, whereas today this is completely transformed so that we have primarily into the super premium, premium plus. We launched super premium as the base in 2011, and now launched in 2017 with the organic range, in 2018 with A2 milk. And as mentioned earlier, this brand is already at around the 1 billion Swiss franc mark. But also we can look at, let's say, more basic products. Maggi noodles has recovered very nicely since the 2015 crisis. And given the strength and trust that we have in this brand, we also see opportunities to premiumize this core by moving into new flavors and variants, and some examples are listed there, whether it be in portable cup and noodles format or the new Maggi special masala with 20 finely ground herbs and spices, which we launched in 2018 on Flipkart and then moved into to retail. We have a sweet corn variety, which sweet corn is actually baked into the noodle strands, and also oats and atta varieties as well, which provide basically fiber of a bowl of oats and 15% of the RDA of protein. So it's really moving Maggi from just being a noodle snacking brand into really more of a cooking and a greater food brand. There are white spaces, clearly. One of the biggest ones is Sub-Saharan Africa. We have a long presence here, over a 100-year presence. And Sub-Saharan Africa is 48 countries, 9,200 employees, 17 factories, and we have around sales of 2.5 billion in mid-single-digit growth. And the population, of course, is around 1.2 billion, and it will grow around 2% a year in the coming years, but it's also home to around half of the world's extreme poor. So this context requires a very different type of strategy. So we need to expand penetration, not just in Nigeria, but if you look at some of these other countries like Ethiopia, Kenya, South Sudan, and Tanzania, they'll represent around 14% of Africa's overall consumption growth in the coming years. And if we talk about the types of products then, the bouillon cube, which of interest, we sell about 100 million cubes a day in Nigeria, are a great carrier of the much-needed microfortification, which is an issue, of course, across the many countries in Africa and also in Asia. And the types of products, again, we need to provide are products which are sold by coin and not necessarily by note. These are, we call them popular position products, like this Nido, Milo, or the Golden Maize product, Golden Maize sold in Nigeria. These type of products today already account for 70% of our sales in Central and West Africa. And Southeast Asia also provides opportunities. Myanmar as a country with a population of around 53 million, with good growth and good growth of the middle class. In October 2017, we launched the product you see here, which is the iron-fortified malted milk sachet. We do have a manufacturing packing facility in Myanmar, and this is showing good results. So again, the types of products we'll sell here, nutritionally fortified products at affordable price points, hopefully will put us in a good stead to grow in countries like Myanmar. We also, of course, are looking to further leverage our existing portfolio, and there's three areas which are sizable and which we participate today, and we see good opportunities. Leveraging, for example, Bear Brand in both childhood offerings, as we see here with the Vietnam product that we sell in Tetra Pak, as well as a product for seniors that we're selling in Indonesia. In pet care, we have a number 2 position. Our business is still relatively small in Zone AOA, but we're seeing a great consumer demand for premium products, whether it be in dog food, with our Pro Plan line to support the immune system, which we have present in all geographies, or the single-serve wet cat taste premium products like Mon Petit, which is sold in Japan and Hong Kong, which is like Fancy Feast, which you'll find here. RTD is also a significant opportunity for us. It accounts today of around 9% of the group's sales. And what's very important here is that we're not just liquefying our powders, and maybe in the past we sort of did that sort of thing, but in some cases we're actually starting and entering and growing markets RTD first. Milo in Vietnam, for example, is a good example of that. But we have to constantly innovate, as you can see here, and you've already seen this protein Milo, which we're rolling out in Malaysia this year, as well as a Nescafé Cafe Mocha Cup, which we're launching in the Q2 in Malaysia. Of course, we're seeing a blurring online, offline, and new retail is really transforming the commercial and retail landscape globally, especially here in AOA. We've passed the 1 billion mark, growth rate of 37% over this period, which is an increase in share of online. We're growing faster than the total category in this area. And of course, there are opportunities in a number of markets where we expect even faster growth potential. Now, of course, a big key is adapting our business to succeed in this new retail. So digitization of retail and hyper-connected consumers are the reality. AOA accounts today for 60% of the cross-border e-commerce, primarily led by nutrition. We're seeing good use and growth in programmatic media and efficiencies. And also, of course, we're seeing mobile-first markets such as Nigeria, India, and South Africa. And then we have the online channels as well. End-to-end business models are doing well. And one of the more dramatic examples, I guess, is in China, where we had the 11/11 Singles Day, where we increased our sales in Tmall by 56% and JD.com by 36%. So we really exceeded the growth on the overall platforms themselves. And then also, we enable personalization and customization at scale, where we have a number of examples. We're testing in Japan, for example, an Uber-type model to help us with our e-commerce deliveries, using senior citizens to help follow that last mile of delivery. We're using R&D social listening platform for, again, I talked about the innovation we're looking for in that market, and then Singapore customized gift packs. Creating shared value, absolutely key. It's part of the heart of what we do in Zone AOA. Rural development, starting with nutrition, we have 120 billion servings of fortified foods, 66 billion, billion in Central West Africa alone. We're also helping markets with rural development. We have long relationships with farmers, not just here in Indonesia, but also very much in Pakistan and India as well. And we're also actively supporting the Nescafé Plan, the Cocoa Plan, and agripreneurship through the Global Youth Initiative. And then also water, we do operate in many water-stressed environments, so we need to practice good water stewardship. And our water use per ton, as you can see here, is down 27%. Narrowing in, as you know, is in many countries, AOA faces a big challenge, probably the biggest challenge as far as a region goes for the group with respect to plastic waste. We follow the global Nestlé framework. We adapt it to specific issues and opportunities. 65% of our packaging in AOA is already designed to be recycled. That means the rest needs to change. We've already started that. 2 examples here in Thailand, with an ice cream changing from plastic to paper wrapper, as well as an outer on coffee. We're also going beyond, because we know that recycling is not enough. We also need to support the development of the circular waste management systems, such as Project Stop you see here. We're working in the Philippines to improve recycling infrastructure, and also we're trying to also, let's say, promote extended producer responsibility schemes. In India, for example, is one where we're doing this. And another very interesting example we're doing in India, we have had a promotion last year where we gave away 1 Maggi noodle pack for every 10 empty wrappers that were collected. And so this resulted in 115,000 wrappers collected last year. There's no simple solution, and of course we have to explore multiple approaches. Since the last investor seminar, our growth has been steady and profitable. Our financials are healthy, and we're committed to strengthening the momentum moving ahead. And so the takeaways are here. We're looking to drive those new consumption opportunities, focus on white spaces, opportunities for growth, grow the infant nutrition, innovation, pet care, R&D, and build capabilities, and deepen partnerships with e-commerce. So with that.
Okay, well, great. Thanks, Chris. Open it up for question and answers. Jonathan?
Thanks very much.
Yeah.
You mentioned it a couple of times, but I didn't hear a lot systematically about local market competition. That's something that development, especially when you get into these coin bot products, it's the barrier to entry isn't enormously high, and local forms do exist, and it would seem a lot of other companies are talking about improved capabilities, whether due to digital economics or whatever. Could you comment on your ability to retain and grow market share in that environment?
Yeah, I think probably Nestlé has been the pioneer in this particular area. I mean, if you look at the markets in this particular region, whether they be in Africa or they look in Asia, this concept of popular position products or designing products which are not inferior to larger bulk size products, but are at affordable price points, is something that we've been doing for many, many years. And it's hard work though. I mean, it's not easy work. It requires, it's not just putting in a different package, but it's actually a whole business model and route to market. And it's something that, we will continue and probably emphasize more moving ahead. What's changed a bit though is the ability now for digitization to help in these particular, let's say, delivery systems that are going to these small stores, that'd be Sari stores or mom and pop shops. And so we're also connecting then to make sure that we're part of that digital ecosystem so that we can ensure delivery. But we talk about premiumization, and I talked about that a lot, but clearly PPP, as we call it, is one of the key growth areas for us. I mean, not just in Africa, as I mentioned, but also in Asia. You have to get these price points right. I think the most critical thing is that you cannot raise prices beyond a single coin. Once you do that, your volume falls off a cliff. So you have to make sure that you reformulate, package the right way, distribute the right way. So you do this. And when you do this right, it can be very profitable.
Okay, next question. Martin?
Thank you, Chris. Martin Deboo, Jefferies. I want to ask you about China infant formula, because it's obviously highly material to your business. Yes. How are you thinking about that medium long term? Are you confident that increased consumption and particularly increased premiumization can overcome the falling birth rate? And also how you're feeling about local competition in China infant since the regulation change? Do you feel that's reinforced local competition or not? Just value your perspectives. Thanks.
Yeah, I mean, clearly it's a great opportunity. It's very dynamic, it's very challenging, and it's correct. It's no secret that birth rates are declining in China. There are over 250 now local brands that are competing. Registration for infant formula in China is complex and it's difficult. But yes, we do feel, as we've seen so far, that a combination of, let's say, factors will help, and we believe continue to see growth in this particular area. One is premiumization, clearly, but it's not just premiumization for premiumization's sake. We're talking, and what we have, of course, is science-based innovation, where we are going in really first often in China with these lead developments. A second area which is interesting is the evolving trade structure. It's really evolved over time from being a mass market product years ago, if you look 15 years ago, to the point now where these baby stores are quite an important area, and e-commerce is an important area, and there's a sort of a blurring between the two. And the third area where there's interesting growth potential still are in those second and third tier cities, where maybe in the past we thought that premiumization was not as much an option, that you needed to go more into, let's say, the economy area. But we are seeing, though, that those premium segments are really increasing, even in second and third tier cities, and that's also facilitated by e-commerce. So overall, yes, we think there will be growth. It's clearly an important area for us. I think we're well positioned, but we have to be very vigilant, and we cannot be complacent.
I see. Yeah, go ahead.
Hi, it's David Hayes from SocGen. M&A-wise in the region, it's gone quite quiet. You've had a couple of deals in the last few years that perhaps haven't been as successful as you would have liked. You've not mentioned deals really here. Horlicks you walked away from as well. So the question is this an organic strategy now in terms of white space, etc., for the next few years, or do you think M&A is doable, but it's just complicated and difficult in certain cases? Thank you.
Yeah, no, I think it's no. We are constantly investigating, and clearly in many of these markets, the way that you let's say, follow-up on M&A is often through developing relationships with the local companies which are based locally. And that's one of the strengths that we have, is that being there for so long and developing those close contacts. So no, we are definitely looking at this. But if you ask me what the primary focus will be, it will be an organic strategy for us. Yeah.
Warren Ackerman at the end, yeah.
Hey Chris, it's Warren Ackerman at Barclays. A question on India. India didn't come up too much in your prepared remarks. Just interested in your thoughts on India. I think it's only 1 to 2% of your group sales. For Unilever, it's 8 to 9% of their group sales, and they've been buying Horlicks, for example. Just interested, when Wang Ling came in, she was trying to fix India with the Maggi issue. How do you actually go about trying to make India a bigger part of the overall portfolio, given the massive opportunity in India? Is it, going back to David's question, is it M&A, or can you actually expand the portfolio into new areas and maybe premiumize the geography overall?
Yeah. No, I did mention India. In fact, I mentioned it as, along with China, one of the geographic, let's say, priorities and focus areas that we will have. I think, like China as well, we're fortunate that we have a pretty wide, let's say, number of categories where we participate in, and where we have leadership now in 7 categories already across India, which we believe can expand. The demographics are right. We talked about the increase in middle-class households and in consumption. There are a number of categories, I think, which are particularly interesting, which are still very new for us. We're in pet care now in China, re-entered. We're back now with cereals. Again, these are very small, but we're planting the seeds for the future. But probably one of the biggest opportunities moving ahead is coffee. It is, of course, a tea culture, where I think in northern India today, it's 60 cups of tea for every 1 cup of coffee. And coffee is sort of a special beverage at the moment. But we really believe that there are opportunities to really grow coffee for us in India. On top of that, of course, as I mentioned, was this food, which is unique in a way. I mean, there are a few markets where we have a really good food business that we can grow and expand on. Again, more just from noodle snacking into a true culinary business, a strong dairy business. So yeah, for me, India is one of the, and nutrition as well, one of the key potential growth areas for us.
Well, great. We still have one last question. Maybe Eileen.
Eileen.
Can you hear me?
Yeah.
Okay, so quick question, and actually it's more of a clarification really. I think you mentioned that, did you say ready to drink is 9% of sales? And
Yeah.
I wonder if that was group sales or AOA sales?
Sorry, AOA sales.
AOA sales, so that would be about 2 billion, right? And then on one of the slides, I think you quantified the total market as 206 billion. So that seems to be less than 1% penetration, which seems extremely low. So my question is, why is it so low? And what are the, are there barriers to entry here? Like, how, because you obviously mentioned ready to drink as a key opportunity. So how easy is it to roll out outside of China, where you are the number 1?
No, well, it's not easy anywhere, I suppose, but it's clearly a focus area for us. I talked about, in China in particular, in RTD, but we also lead in ready-to-drink coffee across ASEAN as well. RTD, again, we have strong brands. We have, in many cases, the route to market, and we have more and more now manufacturing facilities that are geared around this particular area. So yes, it is a huge category. It's a growing category. It is where the future is. And I think uniquely in AOA, we're positioned to go after this. But it's 9% of AOA, is to be clear.
That concludes the Q&A.
Okay, all right.